Hey folks, welcome to Snowpal Podcast. Our guest today is Jessica Perrone. Jessica is a former Wall Street fintech co-founder. Jessica, thanks for taking the time to chat.
And thank you so much for having me. I'm so excited about today.
Oh no, my pleasure. Can you give a quick intro about yourself and what you do, Jessica, and then we can get into the topic.
Sure thing. So, my name is Jessica Perrone. I'm the founder of Her Financial IQ. I'm a former Wall Street founder. My ex and I built a fintech company, global fintech company. And when I left the company, I created Her Financial IQ to really give back to women. What I found was a lot of women have a lot of anxiety when it comes to financial topics, whether it is personal finance, whether it's budgeting, whether it's bank accounts, all the way up to investing. And I really wanted to create a curriculum and an ecosystem that basically made finance more approachable and fun. So I am self taught finance 100%. And what I found was I love finance. And I wake up and I eat my financial news, and I just love all things finance and investing. And I really wanted to project this type of passion on women who initially are very timid and intimidated by the topic. And that's what we've been doing at Her Financial IQ. We've been doing this for 6 years. I have online courses. I also create programs for companies, and I also do workplace workshops as well. So that is the Her Financial IQ side. And I'm also in the process of developing a app as well, an in the pocket financial mentor for women, but that's top secret, and it's been released first here with Krish.
Yep, absolutely. No, thank you so much for the introduction, Jessica. So, we have about 35 minutes. There's a plenty to talk about, so I'm going to rush through this as much as I can. So let's start with, her FinIQ. You said money and investing, and I'm looking at your website. It says finance education for women. So my first question to you, actually, it's incredibly important, and I'll share some of my experience and learnings there as well. But my very first question, you mentioned the focus on women. I mean, as we both know, this is important for everybody, right? Men and women, and there's plenty for folks on both sides to learn. So, what initiated? What is the reason for making this specific to women, and what are some things that you're seeing that might be different when it comes to finance as handled by men versus women?
Oh, absolutely. So thank you for that question. Excellent question. So, because finances are so important for women and men, I do have my co ed company that I created that is FinIQ EDU, and it is co ed because the topics of finance are the same. It's just the way that we approach them when talking to a woman versus a man are quite different. Because there is an initial anxiety, for whatever reason, women are very fearful of talking about money. And this may stem from the fact that women have only had financial rights since the 1970s. And if you think about that, that's crazy, right? We don't think that recently women were given the right to even own credit cards without the co-signing of their husband or their dad. So the
Wow.
whole financial ecosystem still has a lot of uncertainty. And I think that's handed down from parents, especially parents of those generations. The younger generations, much hipper. There's so much more information out there on social media, and they're picking it up a little faster, but there's still that anxiety with women. And when we have males in the room, women will frequently take a quieter role. They won't speak out. They'll keep the lesser role. And when I have these rooms full of women and we're talking, and it's like a coffee talk, right? It's like a wedding, right? It's that type of fun energy. It's not a boring lecture. And even with my men, I and co-ed audiences, I still make it engaging and empowering, but it's just different. There's just an empathy and a softness of the finances when talking with women.
Fair enough. And when you're talking about women, you're talking, when you said, some of what you said is very interesting, but you're not talking about like Afghanistan, right? You're talking about women in America where there's that gap has been essentially there.
Absolutely, absolutely. And excuse me. This is the US and this is, 2026. And yes, that anxiety is still there. I was just talking to a young lady today who was interested in joining one of my coaching groups. And the anxiety had her was so apparent, the fear of even talking about these money situations. And she's crying and she's saying, "Oh my goodness, I'm so sorry. I'm so sorry. I just have so much anxiety." But that's the type of anxiety that is in women that is someone like yourself, I'm sure, can't even imagine that anxiety
No,
is
Jessica, I'll
there.
take two examples of videos that I saw recently on Instagram, and I think that might be relevant to our conversation here. I want to get your thoughts on both of those. In one of the videos, there was a young woman, probably my son's age, like mid 20s. She bought a car. I think she bought a Tesla. And, she shared that information. She said she had put down like $4,000 as down payment, and then I don't know what the interest rate was, but her loan was for 90 months at $1,000 a month. So it was $90,000 in totality plus the $4,000, $94,000 for a car that was, excuse me, probably valued at 60,000, something like that. And I think her income, if memory serves me right, was nowhere near where you expect for it to be, right? So that's one example. And I want to give you the other example as well and then sort of get your thoughts. And I think I can see where someone like you and your product and knowledge can bring plenty of value. And that's why I want to take these examples. The other example I'd seen not too long ago, again on Instagram, Jessica, was somebody who had gotten divorced or was going through the process of a divorce. And she had like two children. She didn't do any of the money management hers, and I'm talking 2026 in the US. Her husband or ex-husband was doing all of the money management, and she had absolutely no idea what was going to happen, and she was panicking, and she came to Instagram. So these are two examples, and I mean, take it with a grain of salt. It's on Instagram, so I want to believe it's truth. It's the truth. But assuming if it is the truth, what do you attribute these insecurities, anxieties, and indecisions to?
So these are two very real situations that I see frequently. So it's not taken with a grain of salt. These are real situations. And you'll actually see these types of situations with men as well. And it is also because there isn't frequently there aren't the money conversations at home, but also just understanding budgeting. Like, when was the last time someone had that budgeting conversation? Like, my mom said, "Hey, keep your hair nice, keep your teeth nice, keep your skin nice." But my mom never said, keep your credit score nice and never keep your budget nice. Though my mom was very frugal. I was the oldest of 8 children. So I did get that from my mom. I got the budget from my mom. She just never used the word budget because we really didn't have the money for a budget. But for real, just be there's certain ratios out there that aren't taught that should be known, like the ratio of your housing, the ratio of your car, and mortgage. So the individuals that the loan officers that write the mortgages, the real estate agents, they're going to push you to be able to think you can afford so much more than you really can. The car sales agent is going to push you to think you can afford more than you can. So really educating yourself and really understanding your budget is so important, as well as credit score, because I'm sure that young lady did not know about her credit score. And if she had a very low credit score, then her interest on that loan is sky high as well. And she may be paying infinite amount more for that car than someone with a good credit score that has a lower interest rate. So I get fired up when I hear that stuff. I really do. I'm like,
No,
someone
I can.
send them my courses, send them my courses.
No, absolutely. No, I think they will benefit from it, right? Because, I mentioned you were working on building this fintech API. And as part of that, Jessica, as we talked to, say, college graduates recently, whether it's in Washington, D.C., or who live in different parts of the country, or even young adults, perhaps even more than young adults, when you ask questions about investing, which I want to talk to you about as well, I ask basic questions about, hey, you're investing in stocks, correct? Or equities of some kind. What is a price earnings ratio? What is a price sales ratio? What kind of numbers should you look at? I mean, not that everybody needs to read the reports, that's complicated, the earnings reports or the balance sheet, but even the basics of what you might need to know. I see people are unaware and then they invest 10,000, 20,000, $50,000, and you're like, oh my goodness, you're putting in money without actually knowing what you might be doing. So financial education is very important. But I want to give you some numbers here and get your thoughts, Jessica, which is, I just pulled up the average debt in America. It says the average American household carries about over $100,000 in debt, and they break it down by generation: Gen Z, millennials, and Gen X. Millennials is like $130,000. So there is a lot of borrowed money, and you gave some examples of buying things that you can or you cannot afford. Where should this education start? Because I was in college for 8 long years. I don't necessarily know if I was taught all of these or any of these things. So where do you think is the place you'll start fixing this?
I have so many things to say just from that little
Great.
dialogue that you had there. I actually want to back up to what you're saying about the investing education. So, the reason why I created so I have three courses. I have my investing for beginners and stocks and ETF simplified, because even before you understand what a PE is, you have to understand what a stock is, right?
Right.
And
Yeah.
you also have to understand how to invest, the different ways to invest in the markets, because frankly, as a newbie, someone that doesn't understand stocks, maybe investing in stocks isn't the best way to start out to learn about investing. And that's actually what happened to me. What you're talking about, I had my initial nest egg, I had my amount that I had saved up, and I was going to learn how to trade like all those Wall Street traders, and I was going to put it to work. And that was the worst thing I could have done, because I didn't understand stocks. I didn't understand how they move with economics. I didn't understand, you know, the safer stocks, the larger stocks that are safer, the bitcoins and how they're more risky. So I didn't understand all of these undercurrents of the stock market, and I didn't understand the safest ways to invest. And that's also what I explain initially in my courses, so that individuals know how to put their monies to work, what type of accounts, what kind of buckets. Because frankly, if you want to buy a car next year, you don't want your monies in the markets, right? It's too risky. You want your monies in more liquid accounts, and that might be a high yield savings account. So we're thinking in terms of the buckets, your time horizon, when you will need those monies. We're talking about the riskiness of the different assets, and we're also talking about the different types of accounts and their riskiness as well, and duration. So there's all these things that you need to know about before you even place your first investment. And that's really what my courses do. They explain how the investing machine works, so that when you go to invest for the first time, you know your options, because you don't know what you don't know, right, Krish?
Absolutely right. And Jessica, if you ever come back to the podcast, and I hope you do, we can have a much lengthier conversation because there's a lot to unpack here, right? There's no way I think I'm going to do justice in 25 minutes, but thank you for sharing that, because there's plenty to talk about in just what you just said right there. So let me take some random examples, to make the best use of your time here. Let's say you take investors of different kinds. I'm going to take real life examples of folks I do know. Some who are very safe. My wife is one of those. She wouldn't invest in independent individual stocks, correct? I mean, that's just not her. She would rather do it on ETFs, or it could be bank accounts, or it could be gold or silver. Now, there are other people, like I'm on the other end of that spectrum. I somehow thrive and enjoy. I feel my adrenaline is pumping when I'm putting more money than I should on something, I don't know, like Meta before earnings today, which I don't know. I don't know what happened. I haven't checked after 4 o'clock. But what do we have a risk tolerance levels, correct? So when you teach somebody, here is what I want to specifically ask you. You're going to tell them the rights and the wrongs based on your experience, which is amazing. But where I think it can get challenging is how do two people find value and apply those learnings differently in their real life. And here's what I mean by that. My wife and I both learned from Jessica, but we have our own personalities, which is outside Jessica's control. So we still learn this material, we learn the nuances, but when we go to apply those learnings, our mind and our inner being comes into play. So how do you suggest that folks take the learning and make those decisions which you can only guide them to, but you couldn't make those decisions for them?
I love this example, Krish, more than you know, because
Thank
your wife,
you.
after taking my courses, will have uh, a risk tolerance that's closer to you. It's just no one taught her the way to invest that is applied to her risk tolerance. So, what does that mean? Okay. So, for example, in my courses, we actually talk about risk and risk tolerance. We even look at sample risk tolerance questionnaires that financial advisors give. And then we talk about the different assets that apply to those risk tolerances. But let me tell you, the beautiful thing about investing is that you don't have to do it one way. And that's really what diversification is. So, for example, myself, I'm probably not maybe not on par with you because I personally I don't even like Vegas. I do not like to gamble money. I walk down the aisle of home goods and I say, "What's the return on my investment?" I like, you know what I mean? Like I know exactly what my monies are doing. However, I will do self-directed trading and investing, and I have my self-directed account because I'm comfortable with that. I'm comfortable with the names that I trade, but I'm diversified. I have my robo advisor account, and that's on another risk tolerance level. And then I have another account that is on another risk tolerance level. So I'm actually diversified in different types of investing accounts based on that. And then outside the markets, I'm diversified as well. So I have real estate, I have cash, I have my stock market investments. So frankly, there is a level and a strategy for everyone, and it's customizable based on your risk tolerance. And there's no right or wrong. Frankly, there is no right or wrong. It's just about doing it the safest way that will give you the most growth for your risk tolerance.
You know, I agree, but I'm going to challenge
Sure
you on one of
thing.
the things
Go
you
on, bring
said,
it on,
yeah,
Krish.
and get your thoughts on it. Right? You mentioned diversification a couple of times, and it's a fair point, right? You don't want to put all your eggs in one basket, so you put some in metal, maybe some in Bitcoin, some on in bank accounts, some in ETF, some stocks, options, and treasury bonds, and whatnot. That's a fair thing to say. But I want to play the devil's advocate here for a second, if it's all right, Jessica, which
Sure.
is a term called diversification, which was coined. I just looked up. I know the term. I was just looking up who coined it. It was by Peter Lynch, and I think it was in his 1989 book. It says "One Up on Wall Street," where he talked about diversification, as in sometimes you could over diversify to the point that you're not getting the returns that you probably actually do want to get. And I want to get your thoughts on that, giving you an example and setting some context there, which is I
So
could be
I
wrong,
was
but I think.
actually
Sorry,
talking
go ahead.
about diversification of risk. So my personal portfolio is riskier than my robo advisor portfolio, and so the mix of that portfolio is less risky than my portfolio, my personal trading portfolio. So I'm actually diversifying across risk. Does that make sense?
No, it does. So can you please explain that a bit more? What does diversification across risks mean?
Sure, absolutely. Okay. So, for example, we have Bitcoin. Bitcoin is very risky. We have, for example, let's back up. Let me just back up here. So, there's different levels of risk that are applied by different situations, not just the stocks. Okay. So, self directed versus managed accounts. Self directed investing is more risky than a managed account by a professional that is rebalancing. Okay. A single stock is more risky than a basket of stocks of the same type of cap. So if it's a
Okay.
large cap stock and a large cap ETF, the large cap ETF will be less risky because the risk is diversified over that ETF. Does that make sense? So
It
you have
does.
all
Yeah.
these levels of risk, okay, that are associated by not only the account and also the investing method, but also the assets within it. And then, for example, you have bonds, right? And bonds have different levels of riskiness as well, because you can have a US government bond, which is considered less risky, right? But you could have a Nigeria government bond that is emerging market that is very risky, right? So these are the different levels of risk. So, for example, myself, when I am investing in stocks, I am those stocks, just by investing self directed in single name stocks, is going to be more risky than my robo advisor account that's managed and diversified into ETFs. Does that make sense? Like,
Oh, it
so
definitely
I
makes
am
sense.
managing my risk, and I am benchmarking. Whatever account is doing the best, that is the strategy I continue with. If my trading is not beating the S&P 500, why the heck am I doing it? Why am I just not investing in the S&P 500? If my robo advisor isn't beating the S&P 500, not only on the upside but the downside too, right? So if my trading account isn't in a down market, isn't down as much as the S&P 500, then I'm doing good, right? If I'm down but not down as much as the S&P 500, I'm still doing good. So benchmarking is so important as well, and that's why I will always have multiple accounts so I can benchmark. And that's something I didn't do in the beginning because I didn't understand that a stock could be down because of the markets and not just that stock, or its sector and not just that stock. And having that benchmarking allows me to not second guess myself and also be more confident as a self-directed investor.
Makes sense.
Sorry,
Let's
Chris.
let
Did I
me.
just I just went I just went off on a tangent
Oh,
there.
no, no, no. I think all of
Learning
that makes sense.
Nicola.
No, no, all of that makes sense. Let me ask you, a lot of what you mentioned that Jessica is, you talked about diversification of risks. You have $100. How do you want to invest the $100? And what are your risk tolerance levels? And, based on that, you come up with a metric that you put the money the way you think it should be put. And then you mentioned that you look for what's doing well and you sort of increase that and probably do less of what has not been performing well. Makes sense. A lot of those were individual decisions, like, guided by what we've learned as humans, so to speak. What I want to ask you is, we're having this conversation at a time where algorithmic trading is gaining more traction, a lot more traction than it was in the past. And a lot of our decisions, even as a developer and a coder, I'm trying to make less decisions than before because there's tools that can make better decisions for me. At least that's what we are being told. So how do you see this pan out as months and years go by, where do you still see people have control or an interest in being able to do this? Or do you see this be delegated to a platform or a tool where I say, hey, Jessica, and Jessica in this case is not a human but a bot. I say, hey, Jessica, I have $100. You go figure, based on my social media interactions and my personalities and access to my accounts, what kind of risks does Krish want to take, or what does he think he should take, and where his investment should be. So none of those decisions are made by Krish, but Jessica as a bot is doing it for Krish.
Krish, you are a mind reader because that's where ultimately I want my app to go. I want to start with individuals' finances. I want to help them figure out where their buckets go because that's the first part of it. And then once they have their buckets and their budget, then we become an allocator. And what I want to do is become an ecosystem where all the financial products are on my ecosystem so that individuals like you and I can allocate via algorithm to those without friction. And that's ultimately, once they have their finances down, they're going to have a baby, they're going to be like, I want a 529, and we allocate to that 529. They're going to want to have a 401k, and they're going to say, okay, I want a 401k. This is when I'm going to retire. Which are the best ones for me? So I want to be able to democratize allocation. And that's ultimately where I want to get to. But maybe we shouldn't So that is ultimately, and you heard it here first on Krish. We'll see. We'll see if that actually happens. But that's my dream. That's my dream. Start with the buckets for your personal finances, build the surplus, take the credit card debt away from the credit card companies, and allocate it to people's worth and generational building of wealth.
No, no, I agree because I'd mentioned to you just before we recorded that started recording that we're working on this fintech API, and one of the reasons for us to work on that, Jessica, at Snowpal here is because we have noticed those gaps. We've noticed those gaps, and we feel like there is a need for a tool, and whether the tool is independent or integrated into existing platforms is something we are working on currently. But no, I couldn't agree more that there is a need for this. But we have about 15 minutes. I want to run through a bunch of other things I want to ask you. Now, you talked about various kinds of investments, diversification of investments and risks and whatnot. There's various levels to this conversation. And what I mean by that is if you're enrolling in college to learn about this, hopefully, it's level 101, then 201 and 301 and keeps going, chugging along. So how do you figure who is ready for what? In other words, if Krish has no idea about investments at all and has never done this ever before, you'll have to start with educating me on ETFs, on metal, on Bitcoin. That's different from somebody who's done some of each of these things or a lot of one of those things. How do you size that up? Because normalizing people's learning levels and understanding and experiences and ability is a key part to teaching, I would imagine, right? Tell me if it's otherwise, because if I'm sitting here and being taught circuit theory, and if I don't know the fundamentals, and I'm either in the wrong class or I should not be, I should be doing things differently. So as somebody who's teaching this, how do you normalize this, and how can you tell who should be administered what kind of curriculum?
Okay, so that is a really great question. I actually have a quiz on my website. Is the investing IQ quiz for women, and it kind of gauges where in the curriculum they should start. But frankly, my curriculum, if you are advanced at ETFs and stocks, my curriculum probably isn't, the wheelhouse for you. Really, what I want to do is allow women to understand the basics of investing and potentially self directed investing. But if a woman has enough confidence to just talk to their 401k administrator and not be afraid and understand what they're talking about, that's a win for me. If they go to the financial advisor with their husband and actually joins that conversation, that's a win for me. So if they are creating their watch list, and I have this method, it's called the identifying investment method, where we I actually teach women how to look at their environment and look for tradable ideas. And that is a win for me. If women have a small account and they start trading that self-directed, but they have the other accounts as well because they're diversified for risk. Because initially, when you start self-directed investing in single stocks, it's very similar to going to Vegas. It really is, because the fear comes in. You don't know the markets, right? A Trump headline goes by, the markets move on Iran, and you're like, oh, I'm afraid, I don't know. Like right now, the times are unprecedented. And when you talk about algorithms and we talk about APIs, the information that our APIs and algorithms are based on, there's nothing like it happening right now. Oil prices at all-time highs and the markets at highs. That's a
Yeah.
correlation that historically should not be happening. And
You know,
that's
it's
why it's still going to be important to have individuals that understand the markets and what's going on, because the information that the algorithms are based on are historic. And what is happening is unprecedented right now when it comes to global economics and domestic economics.
Thank you for making me feel sane because I was talking to my wife, I think yesterday, and I told her, I think, or this morning, the Brent crude oil prices, they were like over $119 a barrel or something like that. And then the market's up as well. I was like, I don't understand this, right? I really don't understand because my understanding all along was if it goes over $100, hell is going to break loose. But now it's become normalized that it's well over $100 and we've come to terms with that. So which brings me to my next question to you. When you talk about women, when you talk about America, that that's one half of the population. But I want to understand where culture plays a role here. I have to believe, and correct me if I'm wrong, that even within the broad category of women and financial education, you're probably running into challenges with many other things that are probably, I mean, there's 10 different women. Maybe they were brought up culturally differently. Maybe one of them is an immigrant coming from one part of the world, another part of the world. So, what are some different, or maybe the way a lady might invest in New York City might be different from somebody who's going to invest in rural Texas, for instance. So, how do you size this up, Jessica? I mean, first of all, are there those levels of differences that I'm envisioning, or am I just being creative here?
Yes, absolutely. You're absolutely right. And I do see those different levels. And again, every woman's journey is unique. But I will say that their risk tolerance grows significantly the more education and the more understanding they have. And I just want the women and anyone listening to me, frankly, before they start doing self directed investing, to be diversified risk wise. And what does that mean? That means make sure you are contributing to your 401k. Make sure that you are contributing to your stock purchase plan. Make sure that if you don't have access to those, you have a robo advisor account, right? Something that is investing the monies for you, that is based on your risk assessment. And then you can take the risk, the higher amount of risk in your own personal account, as long as you have the less risky account that's there as a backup. And it's almost like an investing emergency fund, right? You have your cash emergency fund, you have your investing emergency fund, and then you have your Vegas play money that you can try to beat the S&P 500 with self-directed investing.
Okay. We have about 8 minutes more. I'm going to ask you one last question and give you an opportunity to ask me anything you want. My last question to you, or the second last question, is um, I'll give you an example. If you go to, I was born and raised in India. I've lived here most of my life, but let's say if you went to a rural village in the part of the country that I come from, for instance, the southern part of India, even if a lady had not gone to college, right? Let's say she didn't formally get a college education. The way I've seen women invest is they go with how their moms did something, how their sisters or family did something. So investing in gold or any form of metal was very cultural. And similarly, having a savings account and putting some money there is also cultural. The question I want to ask you, Jessica, is how much of it can be taught through courses and college as opposed to culture? Do you see a need for maybe a cultural shift fundamentally? So even if people didn't learn anything formally, go to college or picked up a course, they would have still learned the rights, can tell the rights from the wrongs, or do you think that's a more difficult problem to solve?
Krish, I love your question and you're spot on. And that's why I love teaching women, because women go into their communities and they teach their daughters, their husbands, their sons, their sisters, their brothers, their mothers, their fathers, their cousins, their neighbors, and then they lift up the whole community. And that is why it is so wonderful to teach women. Another example I just want to talk to you, Krish, is that I had the pleasure of working with some refugees from Nepal who did not even understand financial systems and even thinking about a bank account, right? These are individuals that are still plowing in the mountains, right? Like institutions and
Right.
money
Yeah.
and systems, right? So really, education starts on so many levels, and it starts with where they need to be. They need, it starts at that individual's levels. And that's why I love having the basic courses, the basic financial courses of bank accounts and budgeting and whatnot. And then we have the more advanced accounts, if strategies, if someone is interested in them. And that's really about what financial what her financial IQ is all about, is showing you all the ways you can put your monies to work, all the ways that you can organize your money so that you can create an educated strategy that fits your risk profile.
Perfect. We got 5 minutes. I have one last question, but I'll come to it after I give you an opportunity to ask me anything you want to ask me, Jessica.
So, what are the chances your wife's going to take my courses? Ooh.
I will let her know. I'll leave that to her.
Tell her that after my courses, she may have a better chance at beating you at investing.
Absolutely. Absolutely. Any other questions for me?
No, I would love to have, yes, I do have a question. Will you have a follow up call with me? Because I would love to talk some tech after this.
No, absolutely. Because I want to get into the weeds of each of these items because it takes plentiful time for no other reason but because brevity is not my forte. Yeah, absolutely. You're more than welcome. My last question to you, but then you can ask me more. We have a couple of more minutes. Question to you is: you're going out to dinner. You live in New York City, so there's no dearth of probably one of the best places to be in. What would be your order for an entree, appetizer, and dessert?
Okay, you're going to laugh at me because I would go to Pret and I'd have a little wrap from Pret for like $12, and I'd go sit in Central Park and just really enjoy all the sights around me and just eat my little sandwich. That's what I would do.
Yeah.
And I might go to a nice restaurant and have a martini, but for the most part, I am not a big like extravagant person. I really embrace a simple lifestyle, that is more about the experience. And that's what I hold dear to myself. I don't know if that answers your question, but
No,
yeah,
it does.
I'm
It Sorry, I was just going to say New York is amazing. And every chance we get, we try to drive up there. It's just expensive, but it's amazing. One of the places that we've liked in the past, it's changed a little bit. It's called Fresh and Co. They have it in like a few different corners in like New York. They have this incredible yogurt with a little bit of granola, not too much. It's actually very nice. And then they have an avocado sandwich,
ooh,
which sounds simple. They have them in DC as well. But sometimes the sandwich is only as good as the sandwich maker. It's I go to Potbelly all the time, and it's the exact same Mediterranean veggie. But if the person I actually like, they end up making the sandwich, it just feels more perfect. There's not too many tomatoes. There's not too little of something. It's actually good.
I
I
also really
mean,
love to eat healthy. Like I love to sleep well. I love to exercise. So I don't like really super heavy meals. I don't like a lot of salt. So like I really love Pret because they're like fresh. They're like very veggie heavy and light. And that's what it sounds very similar to you, Krish, and your experience. I think there's
no.
there's Pret in DC.
How do you spell it? Is it
It's
PR8?
PRETT. And I've
Okay.
had Pret in DC before.
Okay, I will look that up. Cool.
Yes, definitely look
Amazing.
it up.
I'm going to give one more intro. So, folks, I will include the link to Jessica's LinkedIn profile and the website, which is herfiniq.com. Definitely do check that out. Thank you so much, Jessica. Your closing comment, and then we can call it wraps. But just stay on the call for a minute after your closing comment.
Well, I think that I've so enjoyed all of our conversations here today, and you've hit on so many important points. And I would say for the men out there, yes, it's interesting because I have had men come to me and say, why don't you make classes for men? Because men are expected to know these things. And we feel embarrassed to raise our hand and say, we don't understand, right? There is a certain taboo for men as well to ask these financial questions. And so, what I would say is raise your hand. Don't be embarrassed. Yeah, raise your hand. Don't be embarrassed because the person next to you probably has the same questions. And have those conversations in your family, have them with your wife, have them with your children, and really start those conversations, because you also can help change that village. You can help change that village too, by educating yourself and teaching everyone in your family.
Thank you. That's Jessica Perrone, everybody. Herfiniq.com. Thanks, Jessica. And folks, until next time, bye bye.